Hey everybody, James here from LAGFX. Hope we're all doing well today. Welcome back to another Sunday session video. If you're new to the channel and you've never watched one of these before, me and Luke just go into the markets. We maybe spend like 8 to 10 minutes each, just running through a couple of pairs and updating you on what we believe price will do in this coming trading week. So if you do take trades, if you do take investments on the Forex markets, this is a brilliant way for you to gain an insight into how we tackle the markets and how we will be looking to trade them in this coming week. So for me, I'm going to be starting off here on the Great British Pound to the US dollar, starting off on an 8-hour time frame because I want to explain to you what my overall higher time frame bias is, so that when we work our way down to the lower time frames, we understand that we are working within the higher time frame bias, which is always crucial because price on the lower time frames is always going to be following a higher time frame bias, and we have to use the story and the bias created through the use of a top-down analysis to ensure that we are gaining that edge in the market and we are on the right side. So we can see that we are within a downtrending market, a bearish market. This most recent blue box here represents the most recent impulsive wave, which technically starts all the way from the top here, but the reason I have identified it as just this point is because this is where the real institutional control started. Obviously within this region we have a lot of consolidation, but the real buy to sell and heavy move down originated from this point. So that is why I'm seeing this point as relevant to draw the impulsive wave from. Sorry to confuse things, but the overall impulsive wave does actually start from this level here. Anyways, we've had A to B to C. So we've had impulsive wave, correctional wave, which comes to tap, or it just goes through the zone that I had highlighted as a supply zone. There was an unmitigated order in that region, which I believed price wanted to trade up to, tap into, mitigate, and reverse from. We can see that what's happened here is that we have had price trade up into the region of that. We slightly wick through it. Goes to a lower time frame. We have the slight wick through. We have a buy to sell candle created. Price pushes away from this region. We tap back up into that supply zone, mitigate it. We then have our next impulsive wave down, correctional wave to come and tap a hidden supply zone this time. Another impulsive wave down. We have a buy to sell region within here. We see that on the next move up, the second move up after that is where we see this wick come, tap us into that zone, another impulsive wave, so on and so forth. So we're pretty much just following the fact that price has tapped into that region, tapped into that zone that we were looking for longer term from all the way potentially months ago. We've tapped into that, we've had fractal bearishness created, and this fractal bearishness has now just come to deliver a higher time frame change of character. So looking in terms of the bullishness that traded us up to these levels, this was seen as the protected swing within this impulsive wave higher. So what we wanted to see was this higher time frame change of character delivered, or the break of that protected low, because that is a signal to us that price is ready to start running the liquidity lows and is ready to start profiting from sell position. So that is the information that change of character gives to us. And therefore, moving forward, I want to look inside of this region and try to determine where can we get involved in sell positions from to now be involved in this movement. So firstly, the thing that I like is this buy to sell right here, where I have an alert set, 1.21366, hoping to see price traders up into this region, find that reversal and entry confirmation to give us a sell position where we'd look to ride that down to potentially partial at this level. But longer term, of course, we are expecting price to come and exceed this final target, which is exactly, if we check here, 380 odd pips away from that zone. So given our bias is correct here, given price follows our story perfectly, we could be in for a brilliant trade. Just for an example of the power within the potential trade that we are looking at, we could of course have the stop loss above the zone, take profit all the way down here. We're looking at a 30 RR return, or a 1 to 30 trade, obviously with partials involved. That's not going to be a full 30 RR, but that's just an example of what I would be looking for in this coming week. Now, let's move on to a different market. Let's actually head on over to the US dollar to Japanese yen. So, this market has also quite recently become bearish. And what's happened is after a heavy bull run, we've seen that price has eventually come to start breaking some of those liquidity lows. We're liquidating a lot of the lows in this region. So a brilliant sign that we are looking to go bearish longer term. Now looking inside of this, we can see that we've had impulse correction, impulse correction, impulse correction, which came to deliver us with a beautiful entry. And then this entire thing here could be viewed as an entire impulsive wave. So if we look inside of this entire impulsive wave, which we can identify with that blue box, impulsive wave, I'm saying that these are the two regions right here that look the best for price reversing in. Now the reason why I would like to see these two be the ones that get tapped is because we have a lot of inefficiency around these regions, and a lot of unmitigated orders lie in these positions. Now, yes, we could have seen price reverse in one of the lower of the supply zones, but arguably I would have preferred to see price trade all the way back up. The only parable we had to consider was the fact that would we ever have enough demand in the market to cause such a deep correction wave to come and mitigate these. Obviously, you can see the way that I have identified both those zones is through buy to sells. This is through a buy to sell on a lower time frame that we've identified. We've had the push down inefficiency here. We can see no wicks return to that region. So if there are any orders within that area, we know they are left unmitigated. We had this buy to sell, but then this candle comes to mitigate that. Again, inefficiency below, so this order should be unmitigated. We could also argue, don't get me wrong, that this order in here is to be mitigated and that this could be classed as a supply zone. But in my eyes, if price is going to trade us all the way up to here, why should it reverse at this level and ignore two large orders just above price? If we have shown signs that we have enough demand in the market to come this far up, then what is the difference in us getting an extra 10 to 20 pips higher to mitigate some of these larger, more important orders? So my bias is for price to just continue trading up. You see I have two alerts set in that region. I don't know why I have that one there, but I'm just waiting for price to tap either 136.046 or 136.955. So that is my bias there on Great British Pound US dollar and US dollar yen. Two markets that we are looking at for some brilliant sell positions potentially in the coming week. However, we always have to make sure that our bias and our story is liquid. And what I mean by that is the fact that, yes, we can have our overall story, which for me is the fact that price should hopefully tap into one of these supply zones. But given the fact it doesn't do that and it starts to play differently, we can't just sit around waiting for price to eventually come and tap these zones. If we get delivered with something different, we follow that bias. We change our bias to fit what price is doing at that given time. And if it is not showing signs of following our original bias, we have to then analyze why it is not doing that and what the best way to tackle it is moving forward. But regardless, that is going to conclude my section of this week's Sunday session. Hope you enjoyed the pairs I have gone through. But for now, I'm going to pass you over to Luke, who's going to go through a few pairs of his own.
How are we getting on, people? I hope you're all okay. I hope you've enjoyed James's analysis. Now I'm here to show you my analysis and show you my setups for the coming week. The three pairs that I'm currently looking at trading and that I've analysed this weekend are the Great British Pound to the US dollar, the Euro USD, and AUD USD. These are the few pairs that I have been trading these past few weeks and I've been very successful with. Moving forward, I am wanting to continue trading in the same desired direction. My bias has stayed the same and will continue to stay the same moving forward in the new coming weeks. Looking here straight on the offset, we have Great British Pound to the US dollar. This is looking at this pair on the 4-hour time frame. We can clearly see that this market is bearish. So this is giving us our bias to sell into the market. We want to be sellers in a selling market. So as we can see here, this pair is following clear bearish structure. we have lower highs and lower lows being created on the higher time frames. So what we want to do is find these higher time frame swing points and then look fractally at the market to find those refined entries in order for us to capitalize tenfold on those positions. So looking here, we can see we have a high set, a low set. We then have a lower high, a lower low. We have just recently had another lower high, and I'm expecting a new lower low to be created. Therefore, we have all of this space here to play with and look to be selling into the market. So 305 pips essentially to be playing around with. So now that we've had a tap into our point of interest, a last buy to sell candle, we've seen that we've had a higher time frame break of structure. If we were just to zoom in slightly, we would say that this was probably the last bullish structural low that was created. We have since seen that actually break, confirming that yes, bearishness is in fact still underway, and this applies for the higher time frame structure as well. So therefore, we have the confirmation we need in order to continue selling into this market. So again, what we would do is we would go down lower time frames. We would look at this structure. Yes, we can see that price has continued bearishness throughout. It's given us our distribution, our penetration of the zone, a higher time frame zone, and since given us the bearish structure that we desire in order to profit from this market. We've had fractal areas highlighted in order to look for those sell positions. As we can see, I entered here and we entered another position here. As an intraday trader, I'm looking to be in and out within the day so we can get those refined entries and still take full advantage of the entire swing lower. So what I've done is I've gone down time frames again, and I have found last buy to sell candles. So we could have this candle here as a real refined entry, but I've actually just taken this whole region as an area that we can look to sell into the market because we have a lot of inefficiency that has been left over in this market. So what we could do is just refine this slightly. This could give us a potential refined entry, a smaller stop loss, better entry, and therefore we can profit more with a better risk to reward return. Either way, we want to be sellers in this market. So me, realistically, I will probably wait for price to actually trail us into this zone. Once price trails us into the zone, we will look for some kind of confirmation that price is looking to go bearish. This could be delivered by a break of structure, a candlestick formation on the higher time frames, or some other form of a distribution. So just so you guys are aware, if you keep these figures at mind when looking at this zone yourself, when you want to highlight this zone as a potential sell zone, I've got a figure of 1.21251 all the way to 1.21489. So if you want to highlight that area yourself, potentially look to sell in some of the market once we have a penetration and clear rejection, then happy days. Keep your stop loss above the structural high that's created, and then your take profit could be set at a new swing low or the higher time frame swing low, which is what I will be doing. Next, we have the euro to the US dollar. This is very similar, same setup, obviously with our US dollar being our quote currency in both of these pairs, or in fact all three of these pairs. We are going to want to see some kind of similarities. So you'll be happy to know that my bias is the same for all of them. I am wanting to be a seller in this market. This would show that actually there is strength building in the US dollar as the base currency is depreciating in this sense. Again, we want to wait for price to trail up into this zone, deliver us with the confirmation that we can actually look for those sell positions, and then we can follow that next impulsive wave taking us lower. Very quick, very brief, but as I say, want to be sellers in this market. We just need to find the zones to be active in them. If you look on the higher time frame structure, you'll find your bias and your understanding on the direction of the market, and you should always be trading with the prevailed trend and not against it. So come Monday, I'll be waiting for that trail up. As soon as we have the confirmation, take that mark, take that move lower. Last but not least, we have the AUD USD market. Exactly the same setup. We've been delivered with multiple pieces of confirmation. We have the higher time frame structure to back our bias. We have multiple pieces of confluence in order to look for these sell positions. Our last piece of confirmation will come through the penetration of our zone and then the distribution or some kind of confluence in order to get involved in those sell positions. So just to summarize and round up my analysis, I am looking to be a seller in every single market. We just need to highlight those zones, highlight those areas, and look for those opportunities to get involved. When you see price trailing into a zone that we have highlighted, look for some kind of confirmation that price is actually reversing and taking its following leg lower, its next impulse. This can be delivered, as I say, by a candlestick formation on the higher time frames, a break of structure to the downside, or some kind of displacement in price. Now, this way of trading is by simply looking at the structural laws that the markets follow, whilst taking advantage of order blocks and last buy to sell candles, unmitigated areas, things like that. So taking advantage of things that are really standing out to us retail traders. When you see tons of lines and indicators on a screen, to me that's just too cluttered. You'll notice that both the way me and James trade, it is very refined, it is very simplistic in its sense, but it works. When you overclutter your charts, it is going to cloud your vision and the way you look at the markets. So just strip everything back and really look at what the footprints are and what the market is doing. Now, I hope you've enjoyed the video and I hope you've enjoyed our analysis. I've given you some zones to look out for there. If you have liked the video, don't forget to give it a thumbs up. All the support you guys provide is very much appreciated. If you're not involved in the Learning Lounge group chat, follow the link in the description. We have loads of free educational content in there, and we update our analysis throughout the week in that chat as well. Now, with that being said, thank you guys for watching, and we'll catch you in the next Sunday Sessions video.